So you're a property investor and want to avoid paying capital gains tax when you dispose of a property. Well, why not think of a new property strategy for you to do that? Check out this video as I go through all of the details. Hi everyone, my name is Simon Misiewicz from Optimise Accountants. I'm here to save you on your property tax. Now, if you're an American watching this video, don't forget that there is a company called Tax. I'll give you the links to them below this video. They are here to help you save tax across the Atlantic. But we're now going to be talking about 0% CGT for holiday lets, just in case you didn't get that from the title. So if you're looking to sell a property and it's a holiday let, did you know that you do not have to pay capital gains tax at all? Well, if you didn't, that's why you're watching this video probably. So before we go to the details though, there is a couple of videos that I'd like you to watch. The first one is talking about holiday lets investments, which gives you the bits of basics. So go check that video out. And there's also a video on holiday lets about allowable costs and capital allowances. All those videos will be below this video box. And finally, we'll be talking about VAT on holiday lets as well. So don't forget that all those links will be below the description field of this video. Now, as we go through, we need to just recount what makes a holiday let. A holiday let, for all intents and purposes, is a property that you have on a short stay let and you kind of rent them out as frequently as possible. Now, for HMRC, they've got this eligibility check, which basically says you need to make this property available for rental as a holiday let for 210 days. You also need to let out that property as a holiday let for 105 days. And then make sure that your lets are not longer than the traditional 31 days, which could almost be classified as an AST. So provided that you've met those conditions, that criteria, the property will be deemed to be a holiday let and therefore you should be able to get the tax breaks. In particular, we are talking about the CGT allowances. So let's talk about CGT on residential properties before we can go any further. We need to make a comparison. So if you have a residential property, you know that you've got CGT annual allowance of £12,300. Now, as a basic rate taxpayer, you will be paying 18% tax. And then as a high rate taxpayer, you'll be paying 28% tax if you're selling a residential buy-to-let investment. And that is a stark contrast to holiday lets, and we'll go into the details there. There are different ways. So there's a 0% band for furnished holiday lets of 12,300, which you get for selling a residential property. But a furnished holiday let can also be obtained from an entrepreneur's relief, so a 10% tax rate when selling the property. That's a lot more difficult to obtain, I've got to be honest, because entrepreneur's relief does require you to have services in that property. So the property itself doesn't allow you to get entrepreneur's relief. You need to provide additional services to that holiday let. Services such as coach breakfast in the morning, maybe an evening meal at night time, maybe even doing the clothing, changing of sheets on a daily basis, concierge service, all of those kind of services would benefit you from an entrepreneur's relief. But for most people that watch this channel, or indeed our clients of Optimise Accountants, we tend to find that people use service accommodation and furnished holiday lets, but don't really provide services. And as such, entrepreneur's relief isn't really an entitlement for them. But what is useful is something called rollover relief. So rollover relief is where you pay zero, nada, nothing in terms of capital gains tax. And I'm going to explore with you what rollover relief is all about. So business asset rollover relief for furnished holiday lets, there is a criteria that must be met. The first thing is that the new assets must be acquired within a 12-month period. So if you're selling a property, you must acquire a replacement asset within 12 months. Failure to do so means that you will not benefit from rollover relief. Now you need to also claim rollover relief. So to minimize your CGT, you can go back one tax year, interesting enough. So if you, in the last tax year, you've disposed of a property and had a CGT liability, but then you've reinvested that money in the current tax year, you can actually go back to that previous tax year and amend it so that you can get the capital gains tax that you've paid to HMRC back. Bonus. But equally, you can then just use that rollover relief in 3 years at a time as well. Most people would try and get their CGT relief straight away. I have to be honest with you. Now, the big thing on this is that the old asset, so the furnished holiday let that you have, is a business asset. Now, if you're going to be replacing it with an asset, it too needs to be a business asset. It doesn't have to be a furnished holiday let, it just needs to be a business. You could be buying shares into a company that is a trade activity. You could be buying a shop that sells products and you're buying that business as well. All of those things are called trade businesses, and that's where the rollover relief really comes into its own. So if you're thinking about, well, the furnished holiday let, as an example, doesn't really work in London anymore, but it might work very well in Wales where it's cheaper and I can buy 2 or 3 properties, then that could really work well for you because you don't have to pay CGT and you can be buying properties that gives you a better return on investment. So let's talk about the other side of it, which is partial relief. Now, we are saying here that if you've got a sale proceeds on a property of £200,000, you've got a cost base of £100,000, you've got a gain of £100,000. If you simply rolled over the £100,000, would I get the relief? Well, the answer is no. What you need to do is make sure that you reinvest the proceeds from the original sale. So the £200,000 needs to be reinvested into the new property for you to be able to claim the rollover relief and pay 0% CGT. Now, what if you didn't do that? Let's imagine that instead you took the gain of 100,000. So you've made the sale £200,000. You've got a cost of £100,000. And let's say you had a mortgage for £100,000 and you've got net £100,000. Now, let's imagine then we reinvested £100,000, which is 50% of the initial sales proceeds. Well, therefore, you can only get a deferment of the 50% gain. So this gain here, you would only get 50% relief because you've only invested 50% of the proceeds. So therefore, you've got this whole taxable gain, which is now open to CGT rates. But let's be fair, this is still a better scenario than paying capital gains tax at the full rate by not using this rollover relief opportunity. This has been quite a short video, so make sure you do get in contact with your tax advisors to help you through that strategy. But if you found it useful, if it's giving you something else to talk with your friends about CGT, then give this video a good like. Drop in a comment if you've got any questions about CGT, rollover, furnished holiday lets, whatever. Then make sure you do type those questions into the comments box below. I tend to get back to you within 2 working days. And don't forget to subscribe to our channel so that you don't miss out on any future videos. And finally, if you want to talk to me or my team about our services, or indeed want a 60-minute tax consultation with me, then why not check out the links below this video for you to book those calls.